Ladies and gentlemen, good day and welcome to the Q1FY26 conference call hosted by Max India Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajit Mehta, MD and CEO from Max India Limited. Thank you and over to you, Mr. Mehta.
Thank you. Namaste and a very good morning to all of you on behalf of Max India Limited. A hearty welcome to the Q1FY26 earnings call. Once again, deep gratitude for all the support you have shown, to our group. And since we will not talk as a group before November, Happy Janmashtami and Jai Shri Krishna. I have with me my colleagues Ajay Agarwal, who is the Deputy CEO and CFO for Antara Senior Living and also spearheads investor relations. Sandeep Pathak, who is the CFO for the holding company. Ishan Khanna, our CEO for Antara Assisted Care. And Ankit Kalra, the CFO for Antara Assisted Care. And SGA, our investor relation advisors. We uploaded the results yesterday in line with your feedback that we should give you some time, so we did it yesterday. So I hope everybody had an opportunity to go through the same. Let me begin with the highlights of the quarter. As I had said last time, our focus is completely on scale-up and execution. So we have been busy strengthening all the building blocks for scale-up, be it marketing, brand, technology, capabilities, and operations. And I must say, it's been a very satisfying quarter. While I already talked about this in the May call, we concluded our rights issue, which was oversubscribed by 1.45x times. Also witnessed participation from promoters and a strong demand from marquee institutional retail investors. And this response is clearly a vindication of the confidence you have in us, the company's fundamentals, and the growth prospects. In view of this response, we also are proposing a further raise of 80 crores because many people were not able to get subscription, in the first rights issue. We will look at, a pref issue by way of convertible warrants for which we will come back to you for approvals. Further, the sale of units in Max Towers, which is a non-strategic asset for us, has been concluded now. And the proceeds are being used for growth of the business. We've also, I think, before I begin the business update, a very strong endorsement from all stakeholders. We have healthy customer satisfaction scores, 90% for care homes, 94% for care at home, 86% for AGZ. Our NPS in AGZ is now 44. It's quite a high score, I must say, for our D2C business. If you look at our Dehradun community, the satisfaction scores for residents continue to be as high as 88%. And the Glassdoor rating, which are reflective of how the employees think of us as an employer, is also 4.3. So very strong endorsement from all stakeholders. On the asset side, I'm very happy to inform you that 100% of the inventory for our Estate 360, the first intergenerational project developed by Max Estates, is now complete. The collections are on track and receipt of Antara fee is also expected to be in line with plan. And we managed to sell the inventory within 10 to 11 months, right, which is quite good. Given this overwhelming response that we received, and the pricing, as you know, in Gurugram is quite attractive compared to other parts of India, we are partnering again with Max Estates for a second phase of the same development. It's a contiguous piece of land and expected to be launched by Q2FY26, which will add to the revenue projections of the company. On Antara Assisted Care, we've added about 45 new beds in care homes during Q1FY26, which is the launch of Chennai on ECR Road, which makes our bed capacity now 340, and about 150 in Bengaluru and Chennai under fit-out, which will get launched in August and September. In the AGZ vertical, we now have 40,000 repeat customers, about 12 to 13% of total customers now. We have touched about 3 lakh lives since inception, out of which 2.4 lakhs on marketplaces, the rest on our own website. I already talked about the NPS, which has grown from 13 to now 44 within a period of 1 year. If you look at all the verticals on the residences side, I already spoke about the Gurugram project, which is about a 2.1 million square feet development, out of which 0.7 million square feet was senior living. Of the 292, while we sold only 280 till June 25, as we speak now, all the inventory is gone. Sales collection of 273 crores with 99% collection efficiency. And we continue to have a steady revenue income by way of management fees. We have received, I think, till about March 19.32 crores, and during Q1 FY26 about 2.95 crores so far. On Noida, as you know, we already sold out the inventories. They're ready for possession. The community is ready. We have collected so far 398 crores, the 98% collection efficiency. We had made an application for the occupancy certificate, which, as you know, the Noida Authority is kept in abeyance till the time larger clarity around Sector 150 emerges. We had filed a writ petition with the Allahabad High Court seeking direction to ask the Noida Authority to grant us the OC. The court has said that if we are able to clear all the dues to Noida Authority and have constructed as per the brochure and the Sports City scheme, then we can approach again for the OC. Accordingly, what we have done, the SPV, which is Content Builders, has already made a payment of 40 crores to Noida Authority. Another 100 crores will go shortly, and therefore we will then approach the appropriate forum once again for grant of the OC. All this was already part of our cash flows. We had taken into account. We were just waiting for the right moment, to make the payment. On phase 2 of Sector 150, once this gets cleared, we are expecting that will get cleared, as well. We continue to monitor the situation very carefully, and we are engaging with the best of lawyers and legal advisors to be able to resolve this issue. One silver lining I keep on repeating is that the phase 2 prices have gone much beyond what we had planned for. If you remember, the last sale in Noida phase 1 was about 11,000 rupees. We had assumed it will become 12,000. Now it's touching 16 to 18,000. So once we get the clearance, hopefully the realization will be far more than what we had expected. In Dehradun, all inventories were already sold out. We keep on getting a small fee from resale that happens sometimes because circumstances in people's life change. The operational revenue was increased to about 6.2 crores in Q1 FY26, a growth of 15% over the corresponding period last year. It continues to be profitable. We have, I think, achieved in the first quarter about 0.85 crores, of profit. We keep on maximizing opportunities to increase revenue and keep a close watch on costs. And the community is PBT positive, about 85 crores of cash surplus lying in Dehradun, which will be used for growth, of our businesses. On new communities, on the second phase of Estate 360, it is called now Estate 361. It's a 1.04 million square feet development, about 360 units now, expected to be launched by September, October this year. The Chandigarh, opportunity, the definitive agreements already been closed with the landowner. Registry will happen sometime the next 10 days. We have begun the groundwork, appointed the architect already. This is a 1.01 million square feet development with 324 units. So with that, we are well above the commitment we made to you of doing 1.5 million square feet per year. We are already up to 2 million square feet for this year. Shifting now to Antara Assisted Care. During Q1 FY26, overall net revenue about 22.06 crores, which represents a year-on-year growth of 2.2x. On care homes, significant expansion is ongoing. 45 beds added, 150 under fit-out. It will take to approximately 500 beds, as we have been saying. Also, a lot of work has happened on the care home occupancy. The net income revenue for care homes stood at 2.93 crores, which is a year-on-year growth of 90%. We have served about 300 patients during Q1 FY26 and over 2,500 patients so far. And as we ramp up, the occupancies, and margins will improve further. All initiatives regarding doctor tie-ups, hospital tie-ups, contribution for digital is up to 14% now. We also now opened a patient assistance center opposite a hospital in Gurgaon, trying to attract people who come from outside the country or outside the city. If you look at the occupancy trends, I can read them out to you. They vary by location, but on the average, in April, May, and June, they went up from 14 to 18 to 23% in June, right? So that's the ramp up we have had in occupancy on the care homes. On care at home, as you know, this is cautious expansion, as I've been saying for the last so many years. Bengaluru and Chennai have registered a revenue growth of 110% in Q1 FY26 YOY. We've also increased the penetration of high-margin services like critical care physio. We have now achieved the highest ever revenue of 4.94 crores in Q1 FY26, a strong year-on-year growth of 24%, led by high-margin service offerings. Contribution margins have come down a little bit from 15% to 12%, while Delhi continues to be 20%. Chennai has moved from negative 26 to plus 1%, Bangalore at minus 5%, is because the inflation kicks in, in April when we go through our salary, actions. The price increase will happen now in the next 2 months, so this temporary impact will get taken care of. So far, we have served about 3,000 patients during Q1 FY26 and over 37,000 patients through this vertical since inception. Also do remember that as we acquire customers, whether through residences, care homes or care at home, we continue to cross-sell our products and services, which was the intent and aspiration behind creating an integrated care ecosystem. We have now stores of AGZ in Dehradun, in the care homes as well, and that's a cross-sell opportunity we want to leverage and therefore achieve higher LTV. On AGZ, which includes the erstwhile Medcare business, now part of AGZ now, we achieved a net revenue of 14.2 crores in Q1 FY26, a strong year-on-year growth of 2.2x. All SBUs have shown strong momentum. On product portfolio, we expanded to 85 products and 180 SKUs. We also filed for 3 patents, which are some innovative products which we'll share with you once we get the patents. Our ROAS, which is an indication of profitability, also 2x achievement by and Y. We achieved 1.6 as compared to 0.87 in Q1 FY25. We also, signed up Anupam Kher as a celebrity, as a face for AGZ, and we have seen very early impact. On marketplaces, the conversion has gone up from 6 to 7.5%, and on Google, the CTR has gone up from 2.5 to 6%. So hopefully we should see a 10 to 12% increase in revenue as an impact of this. ROAS continues to improve. The July numbers are far better, but that we'll talk about in the next quarter. So we already crossed an annual trajectory rate of 70 to 75 crores in this business. 62% coming from marketplaces. Of that, now Flipkart has emerged as another channel which we signed up. It's already contributing 12 to 13% of our revenues and 25% of marketplaces. We also resolved the Meta issue that we had. A new website has been launched, so that issue also stands, resolved at this point of time. Our top 5 products continue to be BP monitors, walking sticks, nebulizers, bunion correctors, pillows, kneecap, Spine Pro, LS Belt, Rollator, and Protect, which we introduced, in this quarter, which have a very high, ROAS. We have initiated imports from China, as you know, which have improved our costs by 20%. And once we're able to stabilize the supply chain, given the geopolitical situation, we'll explore what more we can do. Our plans of launching the gut health solution sometime in Q2, remains. We will launch that sometime in September, October. As you know, we have tied up with Wellbeing Nutrition, which will, do all the formulations and research for us. It's a leading nutraceutical company, which will help us develop tailored products under this partnership for holistic wellness of seniors to nutraceuticals and supplements. In order to increase our access to customers, we have stitched up a pipeline of products to launch new innovations, and solutions. As you know, we had partnered with Boat for all electronics and gadgets required for seniors. We also partnered with Axis Bank. They have about 30 lakh customers on a Silver Linings program. So far, in the first few months, we have already registered a sale of 2 lakhs, a very small number, but these are initial days. On consolidated basis now, our performance for Q1 FY26 in line with expectations, so no surprises there. A net revenue of 41.3 crores, 9% lower than Q4 FY25, but that is totally attributable to the lower management fee. As we have had more sales in Gurgaon, this fee will now go up, and therefore this will get covered up. As I keep on saying, these are all temporary, timing issues, nothing to do with anything fundamental. The consolidated EBITDA is a lot better than the previous quarter. We are 23.3 crores versus 36.9 crores in Q4, primarily due to cost optimization and a healthy treasury income. Overall, our treasury and other assets now stand at a healthy number of 320 crores, and the company has a consolidated net worth of 460 crores as of June 25. This is all about the results so far. Some of you joined the call for the first time. Just want to reiterate, there are three businesses that Antara is into. Residences for seniors, which is meant for people who are more independent but want to stay in a safe and secure environment with all the services. We have, transition care and assisted living and memory care for seniors who require more immersive, interventions because of medical situations and they want to come and stay for short stay or long stay with us. And the products and services business, which is for chronic condition management. Right? This is how we are creating in India a unique integrated care ecosystem, for seniors. The market continues to be strong. The sector keeps on seeing new players. Niti Aayog, is being charged with developing the sector. We also submitted a paper to Niti Aayog for introducing standards across India. You'll be pleased to know that the Healthcare Sector Skills Council took out the standards for care at home, and we became the first company to get a certification. We already have a certification of NABH for our memory care home, and we also have an ASLI Certificate of Excellence audited by Grant Thornton for our community in Dehradun. So in summary, Antara Assisted Care touched about 3 lakh patients so far, and we are quite in line of meeting our promise of creating 8 to 10 communities in the next 5 years, 1,500-2,000 beds, and having Age Easy, available across India. As we had indicated last time, in terms of Age Easy break-even, FY27, early 28 will be envisaged a break-even, on the Age Easy part, and rest of the businesses by FY28 is a discussion we have had in the past, with you. So with this, I conclude my speech and welcome any questions.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from Harsh from Aeonis Alpha. Please go ahead.
Yeah, hi Rajat and team. Hope I'm audible.
Yes, Harsh.
Yeah. So couple of questions on the Resi business. The pace of collection in Estate 360, I understand, was slightly lower in this quarter versus previous. And I understand that's a timing difference, but how should one look at the collections over the next 3 quarters from this project?
Hi Harsh, this is Ajay. So
Hi.
We are expecting approximately 250 odd crores of collection in Estate 360, 250 to 270 for the whole year, in which, just as a number, we have collected approximately 33 crores in for June, and the balance would come. And everything is planned, and there is no red flags in that account at all.
Understood. And on 361, when we say that we are going to launch the project in Q2, does that mean that pre-sales will also start in quarter 2 of this year?
There's no concept of pre-sales actually, so we will be obviously taking expressions of interest, etc. But then, the moment the sale will get initiated by RERA, we'll be fast-tracking all the discussions.
Understood. And just lastly on Age Easy, what you've said that there were some challenges on the Meta platform this quarter. Just would like to get some more color on what exactly happened on that front.
Sure.
Hi, Ishan here. I hope I'm audible.
Yeah.
So, end of February, Meta had changed its policies with respect to the health and medical devices category in Europe in accordance with the GDPR guidelines on certain personal health and personal information that they would not accept from brands under that category, and we were also inadvertently put into that category by them. And overnight, these GDPR rules were applied to India as well, and hence they got applied to us within 24 hours of them being applied in Europe. What we have done over the last couple of months addressing that is obviously get ourselves recategorized into the health and wellness category. We had to make certain changes to the way we were passing on the customer data back to Meta, and we had to also redo the entire website in alignment with the new guidelines. So that is all being done and completed as we speak. and that has led to now us seeing the green shoots coming back from Meta and the data interchange happening.
All right. Would it be possible to quantify how much was Meta in terms of overall non-D2C portion of the sales?
D2C. So the D2C online portion, Meta contribution was around 70% in Jan and Feb, which got massively impacted due to this. But we've also, since then, opened up multiple new channels on D2C. So Google, which was 10% of my overall contribution, is now 35%. I have also activated many online partnerships such as with GPay, PhonePe, etc., which are upwards of a monthly revenue run rate of 1 crore now as we speak, and also expanded offline partnerships with corporates and physiotherapy centers, which has given me a revenue close to around 15 lakhs in the month of July.
So while the Meta issue has been resolved, Harsh, we also discovered new partnerships, and therefore we want to focus on making sure that we don't have a disproportionate share of Meta as we go forward. While we have solved the issue, but we also developed alternate channels now.
Understood. Got it. Thanks a lot and all the best.
Thank you, Harsh.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Ankit Dharamshi from RNM Capital Trust. Please go ahead.
Hi. Good morning, everyone. Hope I'm audible.
Morning. Yes, you are.
Yeah. Thanks for the opportunity. So, I understand that our occupancy has went up from 14 to 23 in June. Just wanted to understand how much time it will take approximately for this existing 234 beds to reach an occupancy of 70. Earlier, we stated that it takes around 8 weeks for one facility to get matured. So, is it the same timeline that it will take for us to mature, or with the experiences that we have got, we are hoping to ramp up faster?
Ankit, we said 8 quarters, not 8 weeks. I wish it was 8 weeks. We'll be all laughing our way to the bank. Yeah. So we're in line with 8 quarters. So in most care homes, we'll see a 65-70% in the 8th quarter or so.
We are aligned to that. So this what was quoted is an average number. So each care home is at a different occupancy, which is leading to this average, because we have a care home which is 10 months old, which is at around 45% occupancy, which is our memory care home. We have a very new centers such as the one in Noida, which is at around 20% occupancy. Bannerghatta in Bangalore is at 30% occupancy. So each of these care homes, based on when they went live, are at different occupancy percentages, and that leads to this average. But each care home will follow the trajectory of reaching to 65-70% in 8 quarters.
Got it. Thank you. We told that there are around 3 innovative products for which we have filed patents. So would it be possible for us to put some color on what is the addressable market size for those 3 products?
These are going to be cumulatively for these products will be between 700 crores to 1,000 crores market is what we target for these products.
Okay. Got it. One just general question. The project cost that we have been reporting for Noida, in Q3 or Q4 we reported 1,000 crores and now it is 1,100 crores. So just wanted to understand how are you kind of calculating this? And
yeah, so when we had approached the High Court, Noida Authority has given a revised calculation for the land cost, and also with the inventory getting extended as held and we are not able to deliver, there are certain costs which are getting baked in on a monthly basis. Adding both the two, I have taken that number. Obviously, we are challenging the demands what has been raised by Noida, but as a conservative presentation, I have added it into our project cost.
So any further revision upwards, or we are confident that now it will stay within that range?
This includes the phase 2 cost also. So while we have estimated depending the inflationary increase, but once we will come into the position of launch of phase 2, at that time when we are going to finally do the costing for the for the whole project, the phase 2 project, then this number will get refined. We are very hopeful that we will be able to contain this number, but then at that time it will come exactly what the number would be.
But the silver lining, Ankit, is that the price that we've taken in our business plan is about 12,000. That has moved from 12 to about 16 to 18,000 now. So that buffer is already there for us.
Okay. Yeah, got that. That I understand. One just bookkeeping question. In segments, we are also reporting business investment. So, just wanted to know more what exactly this business investment refers to, because I'm not finding any detailed notes around it.
You're talking about the last page?
In the segment, we are reporting business investment as a segment.
Business investment as a segment. Just a second. Let me just read it off.
In the segment report, it's saying business investment as a segment. What is this segment about? That's treasury.
The holding. That's the holding. So this segment is a max corporate, the investment which we hold in our subsidiaries as well as the treasury we keep at the treasury corporate at holdco, that is covered under the business investments.
Okay, got it. Thank you.
Thank you.
Thank you very much. Before we take the next question, a reminder to the participants, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Aryan from Arihant Capital. Please go ahead.
Sorry, we can't hear you.
Hello, good morning. Am I audible?
Yeah, now you're audible. Thank you.
Yeah, okay, team. So I have 2 questions. Firstly, when can we expect all these care homes to reach their complete operational capacity? And doing so, how will it influence our revenue?
When you say operational capacity, Rajat did mention that as per the plan, 500 beds, all full capacity, go live by the end of this quarter. So August, September is when we are expecting all 500 to go live.
There is some disturbance.
No disturbance on the call. Please keep yourself mute.
And again, as we previously mentioned, each care home post going live takes around 4 quarters to break even at a contribution level on a 40-45% occupancy. Takes another 4 quarters from there to achieve a 65-70% occupancy when we reach our EBITDA positive numbers. So that is the trend we are following for the care homes that have gone live till now, and should follow suit for the others as well.
Okay, and another question would be, have we any debt obligations for, doing so? And if so, till when can we see them also reduce?
Debt?
We don't have any debt on our books at all.
Aryan?
Hello.
As we said, we don't have any debt on our books except very minor vehicle loans which are business as usual. We don't have any strategic debt as on 30th of June.
Okay, and for expansion, are we planning on taking any sort of debt, or are we going to continue with this sort of business model?
So, in project specific, we can come for a debt arrangement, which is just to take care of the cash flow mismatch for a project. Barring that, for other businesses, we will not be depending on debt.
But as I said earlier, for our growth, we will be looking at fundraise, which I've been saying, about $20 million, after we complete the second tranche of the pref issue in the next month.
Okay. Okay, that's all. Thank you.
Thank you.
Thank you very much. Before we take the next question, a reminder to the participant, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Kashal Shroff from KS Broking. Please go ahead.
Hi. I have a question. The fund is Ageless Digital Campaign featuring Anupam K. emphasizes independent, joyful aging. How has this campaign translated into brand engagement, web traffic, and conversion for AGC?
Okay. So it has done 4 things for us. One is For Google, the click-through rates, which were at around 2.5%, have gone up to around 6%. We have had almost 14.5 million users engaging with the content. So that is with respect to how much it has led to reach. And in the first month, and it's just been a month it has gone live, we focused these campaigns mostly on performance marketing. So it has led to a 1.5% increase in conversion on my marketplaces where we've used most of Anupam Kher's creatives. So it was 6%, which is translating into 7.5%. In revenue terms, this increase in conversion is approximately around 1.5 to 2 lakhs per day of additional revenue, or 10 to 12% overall impact for now.
Okay. And also I have one more question. ADZ expanded from 65 SKUs in its inaugural year to 180 by March 25, targeting issues like joint care, fall prevention, lung health, wearable safety devices. What is the current pipeline for new innovations for FY26? Any plans for healthcare tech like telecare, remote monitoring, AI-enabled elderly care?
The focus that we have now is on now expanding into a new condition. Again, as Ajit mentioned, we'll be launching the gut health, which is a very critical area for seniors in September, October of this year. And in the categories that we are present, our intention is to go deeper. So we will launch upgraded versions of the products that we already have for rehabilitation, joint care, and fall. Some of these will be tech-enabled and some will be innovative rehabilitative products.
Please let me clarify. ADZ is an online-offline store of products and solutions to manage chronic conditions for seniors. We are not a general wellness platform where we will do, teleconsults, etc. for seniors. We will launch products in 4 conditions that we have picked up, around those only, but we will leverage tech. For example, we will launch 2 self-diagnostic engines for lung health and knee health, which the customers through technology can answer, and they will get a recommendation of a care plan. So all the interventions within the 4 or 5 conditions we are specializing in, we will launch, but not general, teleconsults, etc.
Okay. Yeah, that's it from my side.
Okay.
Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Nikhil Gupta from Vayu Capital. Please go ahead.
I think in the presentation you briefly touched about patents. Whatever more can you describe on that, please? That would be quite helpful.
As I said, there are 3 patents that we have filed, both on design and utility. At this point of time, not able to comment because till the time we receive the approvals, not able to disclose. But the good thing is once you file a patent, then nobody else is allowed to copy what you have filed. And these are 2 products in a very large market size TAM, as Ishan mentioned earlier, about 700,000 crores. At this point of time, we can only say that. And what we have done is we've hired a person from Stanford Biodesign. We have a laboratory in our head office where we keep on looking at new products and innovations depending on the conditions we are addressing and the market size. So 3 patents filed so far and some more under research right now is all I can share.
Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Ankit Dharmashi from R&M Capital Trust. Please go ahead.
Yeah, thank you again. Just a follow-up question on the business investment. As you stated that it is a holding company and the treasury that we hold. Just wanted to understand in that particular segment we have been burning consistently. So any particular reason for why we are reporting loss over there?
So largely this business investment is the Max India Holdco, where we had this investment of Max Towers earlier. We used to own the treasury, which was utilized earlier, and then we recouped it by the right issue in the current year, and by monetizing the Max Tower sale also. So this and then we had revenue of the shared services also. But gradually, as we are focusing on the subsidiaries, now the rental income goes away as the Max Tower asset has been sold. The shared service also has been rationalized, and the focus is majorly on funding the subsidiaries and holding the treasury at the holdco. And that's why there is a dip in revenue. Having said that, as we sold this Max Tower sale and concluded it in the first quarter, for this particular quarter there is a profit, which is almost 9.5 crores of profit getting reflected in the exceptional item, which is adjusted by the right issue expenses which were incurred for completion of the issue.
Okay. So going forward, we see that this particular segment will not be having significant burn, right? Cash burn.
So the revenues here are contingent on the amount of treasury corpus we have, and the expenses are more or less static. So there could be minor cash burn, but this is not a significant segment as compared to assisted care and residences, as this is purely at the whole.
Oh, understood. Thank you. Thanks for the clarity.
Thank you.
Thank you. Before we take the next question, a reminder to the participants, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Aditya Jain from Avenue Capital. Please go ahead.
Hi. Thanks for the opportunity. How much would be the cash burn do we estimate in the assisted care segment for FY26?
We're expecting around 90 crores between care home, care at home, and AGC.
For FY26.
For FY26.
Okay, thank you. And my second question is, what would be the gross margin in the AGG products for India versus China?
So there is a 20% COGS improvement that we've seen when we import from China compared to what we source from India. So currently there'll be around gross margin of 40% of the India products and currently seen around 55% from China.
Okay, got it. Yeah, thanks. Those were the two questions I had.
Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you very much. Thank you for all those questions. Really helps us, paint a picture of what we are doing and get clarity on how we are progressing. Once again, a big thank you and all the support that you give us. We'll continue our focus on execution. As I said, this is a scale-up year for us in all the businesses. We'll see launch of 2 new communities on the residences side, and hopefully if Noida gets resolved, maybe a third one, as well. On care home, significant expansion already taken place, so we should see the throughput in revenue. On assisted care, the nature of a D2C business jumping, 3 times. So it's a 3-time increase in business, everywhere in all the verticals. That's where our focus is on. And I'm really glad that quarter on quarter we are able to report the results as per the plan and not give any unpleasant surprises to you. So very glad for that. So thank you very much once again and wish you all the best.
Thank you very much.
On
behalf of Max India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.